Hello everyone, I am Heber Joseph, the CIO and CEO Equity at ASK Investment Managers. Today, I'll take you through our core investment philosophy, which is a bedrock of what we do in our clients' portfolios to arrive at thoughtful investment decisions. For me, great investing is like putting together a winning cricket team. You need a dependable batting order, wicket-taking bowlers, all-rounders, intense research methodology that goes behind the game, and a well-laid-out game plan that helps the team to play to their strengths in different match conditions. Our focus investment philosophy is the intense research methodology which goes behind the game plan. It ensures to look at various aspects of a company in a structured manner and arrive at an all-rounded view on the fundamentals, quality, and valuations of the business, which eventually helps the team to invest and generate long-term risk-adjusted returns for our clients across market cycles. Let us take a closer look at our investment playbook and walk you through what focus means to us. We believe that sound investment ideas are based on deep understanding of business fundamentals. Before investing in a company's stock, we analyze whether the underlying company has a strong balance sheet, operating cash flows, and is at comfortable debt position. What we avoid is important to highlight. We stay away from businesses chasing growth with increasing debt levels. It is important that we deep dive on the strength of the business. For example, we try to gauge whether a company has unique qualities such as quality management, proven execution skills, market share gaining trend, prudent capital allocation, and resilience displayed in the past to sustain economic downturns. Profitability matters too. Consistent earnings, profit growth trends, efficient cost structures, and the ability to grow both organically or through value-added acquisitions are important considerations to have. Simply put, we invest in businesses that are built to last and has the potential to deliver in the long run. After looking at the fundamentals, we also want to assess the opportunity size for a company or a sector. Scalable business models generate wealth for investors. Therefore, understanding the growth opportunity is super critical. This also involves arriving at the size of the addressable opportunity that can be enjoyed by the company in the next 5 to 10 years. Plotting the competitive intensity and determining the growth prospects are also equally important. Other examples are infrastructure, manufacturing, and engineering sectors, which are part of the India growth opportunity. India is getting a complete facelift. The government is heavily investing in roads, railway expansions, airport modernization, and port capacity additions. Take an example of quick commerce. This space is expected to grow under $3 billion to as much as $53 billion. Despite this unprecedented surge, it would still be around 3% of the total domestic retail market. It means players in this space have ample room to grow. Interestingly, there's a spurt in the growth of data centers driven by data usage and internet penetration. In short, we aim to identify in advance where tomorrow's growth is going to come from and invest in those businesses that are positioned for a scale-up. The biggest delta in an investment journey can be experienced by being aware of the business cycles. Therefore, understanding market cycles and business cycles are key to generating superior returns. Legendary investor Howard Marks' book, Mastering the Market Cycle, explains this concept quite well. If we apply some insight regarding cycles, we can increase our bets and place them on more aggressive investments when the odds are in our favor. We can take money off the table and increase our defensiveness when the odds are against us. If you look at the Sensex, you can see how it has behaved through economic reforms, crisis, and election cycles. While it has generated wealth over the long run, the Sensex has gone through multiple ups and downs. Similarly, companies' businesses also go through cycles. Take the example of one of the FMC giants in India. Over the years from 2010 to 2019, it has delivered robust returns driven by strong return ratios. However, As the ROE or return on equity levels dropped post 2019, the stock returns also collapsed to 1% CAGR from 2019 to 2025. So it means that our job is to catch the upswing early and exit before such downturns start. It is easier said than done, but if we have a good process to be aware of business cycles, it increases the probability of success while investing. Next, we study whether businesses have unmatched moats or not. Moats are nothing but unique advantages the company enjoys over the competition. We believe that moats are a key to investment success. Moats include strong brands which dominate mindshare, platforms with network effects, franchise businesses, companies with regulatory protection, and have established technology barriers. Finally, and most importantly, governance standards in the company and the valuation that we pay for the business are crucial for achieving good investment outcomes. For us, margin of safety is of utmost importance. We wish to buy a stock of a company which is having an exceptional track record and also available at an attractive valuation. Every investment must offer clear margin of safety, which means buying at a discount to the intrinsic value or the fundamental value of the business. Equally important is stewardship. We back managements that are ethical, forward-thinking, and committed to long-term value creation. Strong governance isn't just a checklist. It is a risk mitigator and a trust builder. To sum it up, at ASK Investment Managers, our focus investment philosophy is central to all our investment decision making. We are building a strong data-driven framework to assess all the variables that we spoke about. A focused way of following this disciplined methodology helps us to navigate cycles, identify high-growth opportunities, and invest in businesses with a strong competitive advantages. We believe it is integral to creating and protecting our clients' wealth over the long run. Thank you and happy investing.